It's time now to get the very latest business news, and Yuka Roya joins me here in the studio. Hello, Yuka.
Hello, Nadia.
You're going to be starting us off then with Donald Trump doubling down on his threat to slap heavy duties on Chinese imports.
That's right. The US president is now instructed his trade officials to consider an additional $100 billion in tariffs on Chinese goods. This comes just 2 days after the US and China both announced plans for $50 billion in import duties on each other. Selena Sykes has the latest.
The trade fight continues. US President Donald Trump has instructed trade officials to consider a further $100 billion in tariffs against China, in addition to the $50 billion already proposed on hundreds of Chinese products.
In many respects, I think we're going to have a fantastic relationship long-term with China, but we have to get this straightened out. We have to have some balance.
China says it will fight back at any cost after filing a complaint with the World Trade Organization. Its foreign minister again called on the international community to oppose Washington's recent trade moves.
If the United States believes it will benefit from protectionism, it is making a mistake.
Tensions started in March, with Trump announcing heavy tariffs on steel and aluminium. Beijing felt the move directly targeted Chinese trade and threatened to carry out an appropriate and necessary response. On Monday, Beijing increased tariffs on 128 US products, including frozen pork, wine and fruit. In response, Trump proposed 25% tariffs on around 1,300 industrial, transport and medical products on Wednesday, worth $50 billion. The next day, China announced it was imposing reciprocal tariffs on another 106 US goods, including soybeans and corn. These latest tariffs have not yet come into effect, but the prospect of a trade war between the world's two largest economies is keeping global markets on edge.
Now let's look at the latest trading action following those developments. And European stocks here opened broadly lower. As you can see, London's FTSE down 1/3 of a percentage point, Paris's CAC 40 and Frankfurt's DAX both down 0.5 percentage point. Asian shares earlier fell too, though they bounced back in Hong Kong, as you can see, ending up over 1%. The markets in Shanghai was closed for a holiday. The White House released that statement from Donald Trump after the markets closed on Wall Street. Trade fears have been causing a lot of volatility the last few days. As you can see, the Dow fell sharply at the beginning of the week following China's retaliatory action in response to US's metal tariffs. They went up and down again as the two sides both announced $50 billion in tariff. The shares started going up again in hopes that there will be a diplomatic solution out of this, but shares may be lower again at the open later this Friday. Now, in another business news, India's central bank has banned financial institutions from dealing with cryptocurrencies. The Reserve Bank of India said it decided to take the measure with immediate effect in view of associated risks. Those already providing digital currency services must end them within a specified time. The move comes as financial watchdogs around the globe are struggling to find ways to regulate the highly volatile market. Bitcoin's price, for example, rose more than 1,300% last year. It hit $20,000 mark in December, but is now worth around $7,000. And that brings you up to date in business.
Yuka, thank you very much. Yuka there with our business update.